Hey guys, thank you for viewing my site on Facebook, and I just wanted to make another video here. Over the last few weeks, I've been flipping around with what I've been looking at and concentrating on, and the one thing that I've come down to is XLF is not a good index to trade. So I'm not going to be trading XLF, and here's why. As the stock's going up or down, the options aren't reacting correctly, or if I do a spread, it's losing both on the top and the bottom, and it really has to move way too much for me to get a profit, like it did that other day where it basically, for XLF to make a profit on a spread, I'd have to have like the Dow open 600 points up or 600 points down, gap down or gap up from the day before. And that doesn't really make any sense because that's not very common. However, I was looking at Ford stock. One second. I was looking at Ford stock, and even when it moves just a little bit, like right here, here was the previous trading day or yesterday, and it just opened a little bit up, and the options at the money moved like 5 times higher right on open. Now, grant you, they fell pretty fast, but with just a little gap, you have a lot of movement. And with XLF, at this little gap here, nothing. The options kept dropping in price. Don't like that, not efficient, and doesn't make me any money. And so another reason, let me look at my list here, my talking list, what drew me to Ford. Another thing that drew me to Ford was it really mirrors the QQQ, right? XLF is a little bit more specified with the amount of stocks. It's an index for a certain type of stock, but QQQ really indexed the Nasdaq as a whole, mirrors the Nasdaq as a whole, and I really like how Ford moves, and the change ups aren't as quick, even as QQQ or as XLF. So it's much more smoother and easy to predict and easy to follow the changes. So that's another thing I like about it. And now you might think, Ford is pretty low priced for a car company, $6.50. But I really looked at its history, even back to the 90s and 80s. And it really has been hanging around 10, 15, 30 bucks, then back down to 10. So, Ford I think is here to stay for at least for a little while. And while it's here, I'm going to be trading the stock. Now, one thing to look at, see these tracers? All right. You see how when an arrow starts here, or when an arrow starts here, you have tracers that come out. I like it when tracers are moving around. When a tracer flatlines, stay away. So right here, here's a flat line. It's been flatlining for the last week as bulls versus bears have been fighting over the market, and there hasn't been a clear winner. So right now with Ford and with QQQ, as long as these tracers are deadlined here, see, you can see the tracer right around here. This means, there's action happening. And we're looking at tracers here, and as long as it doesn't come out of the arrow straight, all right, when it comes out at an angle, it's rock and roll time. You can play. There's going to be volatility, because really what you need is volatility to make any money in the market. If you think about it, if the market just went flatline and went straight across, no one would make any money. Nobody wants a lack of volatility, and unfortunately that's what's been happening here since since the 12th. So kind of a snooze. However, my other system where I'm buying same week options at close for the next day, that I did right here get a 5 times jump, and I'll talk about that a little later. Still talking about Ford and why I like it. Ford is a pretty steady stock. It's easy to see when the indicators change, so that's why I like it. And another thing is I like the options. The options are thick. Okay, it's every buck and a half strike. Okay, there's a lot of activity. Okay, which means I have good volatility. Things will always be executed when I want, and people are really all over this stock with the options. So it's a good optionable stock. So that's another reason why I like playing it. You look at some options of some stocks, and strike prices are weird or way out there, or they're not reacting correctly. Because what I like, on a down day, I like seeing red in the calls and green in the puts. Even though it started to slip here, because the market at the end of the day started to what was it, climb, and so things started to slip. But yeah, I've seen like XLF, for example. I've seen red up here, red down, all red down here, and then, you know, what's the point? You just lose either way. I don't like that. So I like Ford stock for that reason too. The reason why you did see some red down there is because, again, we're in a flat line situation. You don't want to trade during a flat line. You want to stay out, and the only thing you really want to do is my other system where I try to jump things on the same day expiration on Thursday and Friday. And again, I will talk about that at the end of the video. Okay, let's see. Ford options, many, very liquid, got that. Ford follows QQQ. Yep, if you put both of those charts up on top of each other, Ford really follows the QQQ index. So I'd like to call it an honest stock because it just follows right with the QQQ, especially since the QQQ is our foundation of, you know, which way we think the market's going to be going, and we're looking at the cubes, and then, you know, Ford follows it. So I know I'm repeating myself, but that's another reason why I like it. Now let's look at my boom system on Ford for Thursday and Friday same week options. Let's go back to this. Now, one thing that you could do is on Thursdays and Fridays, now that stocks expire every week. You know, a lot of companies have options that expire weekly, and Ford is one of them. You could get insane movements as you get close to expiration day of several 100%. All right. Now, let's say you have a stock that expires, or an option that expires in 3 or 4 weeks. Something happens, it won't move that fast because there's a lot of time towards expiration, and people think, well, we got time, so it'll only move 10-20%. But that same option that expires in a day or two, small movement could really magnify to well over 100 or 200% gains as long as you're on the right side. So that being said, on a Thursday night, I will take a look and see which way I think Ford is going to be moving the next day. And one thing I have found is you can look at it's the indicators like called YM explanation point, which is basically the stock futures. So I look and I go to QQQ and I go to 5 minutes, okay? And what I do is at the end of the day, so let's see, here's the 19th, here's today. At the end of the day, I will go and I will see which way these futures are. If the futures are at the bottom of the chart here, okay, because what I did was I added another indicator, YM explanation point, and it was basically stock futures, and I dragged it down here to the bottom. If this indicator is near the bottom, usually the next day it'll want to go to the top. If at this point this indicator is at the top, next day I found it'll usually want to drop and go to the bottom, which corresponds to the stock dropping. So right here you see the indicators at the bottom, and so I'm thinking because it's at the bottom, next day things are going to pop. So let's see what happened. Boom. So it popped up. See what I'm saying? And so that's how I, in part, try to figure out which way I think it's going to go the next day. There's other things, of course, that you could do to see which way it's going to go the next day. You look at the Ford chart itself, and the reason why I was leaning on that so much is because there's been a flat line here. Okay, so I have to look at the stock option futures. But when there's no flat line, you could see which way it's probably going to go. So it's kind of flat here, you don't get in, and all of a sudden the tracer starts coming up. That means while it's going up and the tracer's going up, you're probably going to have up days at open. And then you could bet accordingly that way. Or if you're on a downtrend and the tracer is not flat and it's going down, you're probably going to have down days gapped at open until you get to the bottom and one of these indicators dives below the DMI line, which means the party's kind of over, and then you want to sort of wait out until you have a new arrow. So once again, as this is going down, you see the DMI line? Here's the main DMI line, the purple line, okay? The brown is the negative, which would correspond to red going down, and the blue is the positive, which would correspond to things going up. So let's look at this one. So you got a new arrow, and then you jump in, and then things are going up, and you could see this is up outside of the DMI line, but as soon as it dives down underneath it, you start losing steam, okay, and that's when I tend to stay out of it. So let's look at this one over here. So you have a new arrow, green, it's flat, I don't like it. All of a sudden the tracer starts to move, it's not flat anymore. Now I could get in, and you see now it's the blue DI line outside of the DMI line, and you know it's showtime until this ducks underneath the DMI line, which means it's kind of over, and you lose steam. You can see there. Now it's coming back, and now it's this line's turned outside, and then you ride this on down. So basically, you tend to have gap downs when you're in a positive area here, or a DMI that's outside the DMI line, DI line, and you tend to have gap ups when you come up in the green until this dives underneath. So that's how you pretty much can get a guess of which way the market's going to open, depending on if you're on a green cycle going up after a green arrow or a red cycle going down after a red arrow. But what I had to do here, because we're in a flat line, is I was looking at the stock futures line over here, but not in the 1 hour on Ford. You go to QQQ and change it to 5 minutes, and that'll give you kind of an accurate look at the next day. Now you can use this forever pretty much to get an idea of what you think the next day is going to do. And once again, if it's near the ceiling, I kind of tend to bet the next day is going to be a drop, and then you could see the next day was a drop when it opened. If it's on the ceiling, then it's going to be down. If it's on the ground, the next day it might be up. So I could find that correlation over 75% of the time. So that'll give me an idea. Okay, what am I talking about next? That's my boom. Oh, so back to my boom system. Then, so on Thursday, I'll just try to see which way it's going. And when I find out which way it's going, I then, let's say I think it's going to go up. I will pick one option right at the edge of the money, which is still in the money. I will bet one there, and I will bet on one option that is just outside of the money. That's not colored. The only reason it's colored because my cursor is moving. So here it would be, I would bet one $6 strike, and then bet one $6.50 strike. And then the next morning, within the first 5 minutes, you sell them. It's got to be in the first 5 minutes, preferably in the first 3 minutes, because usually it's that first gap up, and then things start to slip right away, and that's when you want to get out. Okay. Another thing you might want to do is set to sell at 3 times the profit of what you paid for it, because then the computers could just read it and instantly do it without you like trying to pile in panicky all manually. So I tend to do that the day before, especially when I find that the Dow futures are way up in the early morning. I'll set it up like that. Okay, and then on Thursday nights, I just do a spread. Okay, so on Thursday nights, what I'll do is I'll buy one right at the money, one right outside the money, and then I'll go to puts, and I'll buy one at the money and one right outside the money, and then I just see which way shit flies, basically on Friday at open. Okay, but one big thing is, since you've got options on Friday that expire the same day, okay, you need to get out immediately Friday morning in the first 5 minutes. So what you do is you just sell the 2 options puts, and then you sell the 2 options calls. Boom, 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 and you get out and you see what shakes out when the dust clears after you sell them both. Again, it's got to be done in the first 5 minutes. And you can pretty much do this every week. So you pick the day for Thursday, and then for Thursday to Friday, that's when you put out your spread. One at the money and one right outside the money. One at the money, right outside the money for calls. One in the previous for puts. So that's that is my boom system, and that tends to bring some pretty big returns when you do it like that. All right, so otherwise we're going to be using the Ford 1 hour chart, and what I like to do would be just to trade it. So I will be sitting at my computer, and like in the morning, I'll see, maybe I'll get a green arrow, and I don't like the flat tracer, but when it starts to go, I'm in, and I like buying options. Now for this, you're about 2 weeks out, 2 week out options. You're just sitting there, you're waiting for it to go up, and then once I see like I'm like in the green, and I see the blue die below the DMI, or I get one of these boxes. This is a pivot point box. That's another indicator I have. I'm out, and I sit there, and I'll just wait for a red, and then I'll start it all over again. So I got a red arrow here, and then a red line, and I get in with puts. And then, I might see a box here that says a pivot point reverse, and you're wondering what channel that is. What indicator that is. It's called Pivots HL. Okay, and you look that up. You can look that up right here underneath